trying to get that leadership position back. That's ICICI Bank and Trade for you. We've got Nilesh Jain as well joining in on the show. Nilesh, hi, afternoon. Just looking at some of these buoyant mid-caps, and I don't know how many of them do qualify as mid-caps any longer, but a PG Electroplast, a 7% tear up, Ashok Leyland higher by roughly 6%, Biocon, a 5.5% move yesterday, today another 3% higher, or for that matter, even Hindustan Zinc. Any trading opportunity in any of these momentum plays today?
Very good afternoon to you. Good afternoon, everyone. Absolutely. So, couple of stocks we have already recommended to our client as a part of disclaimer. So, Ashok Leyland and Biocon are two of them. So, we continue to remain bullish across all these counters. Ashok Leyland, our price target comes up around 155 to 160. We still believe that there will be another leg on the upside in this particular counter, although the risk and reward is not looking favorable at current level. But buy and decline should be the strategy, keeping a stop loss below 144. Any dip from here can be used as a buying opportunity, and target would be 155 to 160. Talking about Biocon, it has given a fresh breakout today, good down the bottom formation. In fact, if you see across all pharma stocks, we are witnessing a good momentum. So Biocon upside target could be somewhere around 430 to 445, and the stop loss can be placed somewhere around 405. So it's a buy at current level and on declines as well.
Okay, those are some of the buoyant movers from within the broader end of the market. And if you look at the broader end, and if you just look at the advanced decline picture, it's not looking all that bad. While sure, there are deep cuts even within the liquid universe. I'm looking at a Union Bank, which is down 2.25%, Astral down over 2%, Uno Minda down nearly 2.5%, Policy Bazaar, Supreme Industries. These are all names which are falling anywhere between 2 to 2.5% apiece. But the breadth is quite okay. It's largely even Steven, a count of 117 standing to the declines within the F&O pool right now. But to the losers list, look at a BEL today, and then of course, draw that in with a Cochin Shipyard earnings, for instance. Disappointing set of earnings. That stock saw a gap down when it started off in trade, and from there resurrected about 3% or so. I think on open it was down about nearly 8% or 7%, and it's now stabilizing around those 1700 levels. But Kunal, we were talking about this in the morning as well. A, does a name like Cochin Shipyard become a buy after the earnings disappointment that has played out? And B, then what does it say about the leadership within the sector, which has now been standing all in with names like BEL?
See, now what matters over here, Aisha, is that the price for these stocks. Now, Cochin Shipyard was a stock which was almost at 200, 300 4 years back. That stock went to 2,800 or 3,000 odd levels. So after a 10x, 15x kind of a jump, these stocks are down 50% broadly. So what matters over here is that if you're a long-term investor, and then if you're looking at the price-wise entry, then I think 1,500 levels thereabout is a very good entry point for a stock like Cochin Shipyard, because that takes the stock back towards maybe a couple of years, 2022, 23 odd, where the stock was almost at those 1,500 levels. So I think in that sense, the time-wise and the price-wise patterns over here matters quite significantly. But on the other hand, I think if someone is looking at a momentum play and is looking at more shorter-term charts, shorter-term oriented time frame, then I think something like BEL at current levels of 430, 425, thereabouts, HAL I think at 4,600 could be good bets from a shorter-term perspective.
Okay, what we'll do is we'll slip into another short break. On the other side, we'll continue coverage. Plenty to talk about in terms of stocks, some big movers in the markets today. Stay tuned and we'll get you all of that. Welcome back, and you're watching Closing Trades here on ET Now. One sector or space which has been under some bit of pressure is the defense space. Nilesh, of course, some of the numbers on the fundamental side didn't really add up. There was a Cochin Shipyard, among others, including an HAL, which has caused some bit of pressure on some of those names. Good opportunity to buy, you reckon, at this point for a temporary reprieve bounce back, if at all that is possible?
Well, Harsh, absolutely. Yesterday we saw a slightly poor set of numbers from HAL. Then today we are witnessing a rebound, and similar is the case with Cochin Shipyard as well. But I believe these are the good opportunities. Specifically, HAL looks positive to me given the kind of structure it is panning out. 4600 is acting as a very strong support. Keeping that as a stop loss, long position can be initiated at current level. We are expecting a pullback move towards 4900 to 5100. So these are the two immediate target on the upside. Cochin Shipyard, I would rather wait for some bit of a reversal candle, but yes, HL can be accumulated.
Alchem, that's a pretty active stock today. That's, of course, sharply reacted, I think, only to its numbers, was holding out in the green, and then there's been a sharp slide thereof. Stock down 1.5% right now. In fact, want to see what some of the other pharma contenders as well are up to, and where is it that you are seeing meaningful moves, if any. Let's bring up the likes of a Sun Pharma, Oro Pharma, etc. And then, of course, you know, the other players within the CDMO space, like an Oro Pharma. Let's check in on a Gland Pharma as well. Oro holding very strong, 2.25% higher. Gland Pharma is the other one, which will also just come up for you on your screens, lying pretty quiet right now at about 1836 odd levels. Kunal, Pharma, while of course it's been a very, very select story out there, anything that's looking attractive, any name that's showing leadership within the entire sector?
Yeah, so I think Lupin is something which looks fairly attractive at current levels. You know, the stock has gone through a major time-wise consolidation, specifically over the last 8 to 9 months, where the stock has been stuck at this range of 1900 to 2000, broadly thereabouts. But the last couple of days, the last week of momentum for Lupin indicates that the stock is getting ready for a breakout, specifically about this major swing resistance around the 2050 mark for Lupin. So that's an interesting name to look out for. And looking at the volumes, the turn in terms of the indicators, we could be looking at the stock performing really well for itself. Denmark could be the other stock. And it seems like the stock has come out of a major correction, almost like a 500 to 700 point correction for Glenmark over the last 3 months. At current levels, looks like the stock is forming a double bottom as well as a strong support for a better risk-reward trade to take at current zone for the pharma pack.
Okay, so some names in pharma that you want to keep your eye out on. Nikhil Ranka, CIO Equity Alternatives at Nuvama Asset Management, joining us at this hour to talk to us about markets and more. Nikhil, let me first try and get a sense from you, in particular within the pharma basket. Biocon has been particularly active. You believe that justified the kind of moves that the stock has made, and at these valuations still attractive, you reckon?
Good afternoon, Harsh, and thanks for having me on the show.
Pleasure.
So if you look at Biocon, Harsh, the key trigger was, if you see biosimilar segment, which is the key revenue driver for them, this quarter there was almost a 300 crores sequential improvement in revenues, and margins have also been fairly strong this quarter. Plus, if you look at the management commentary, they have very clearly guided there are a slew of launches that are lined up for them in that segment. And from here on, every quarter, the guidance is the profitability should keep improving over the next few quarters for them. And on the regulatory side, also for the interchangeability, there has been a lot of regulatory concessions that's been given by US FDA. So all put together, I think the stock still has legs. We can see further 10-15% up move in Biocon, and we have a fair value of closer to 500 rupees for the stock.
Interesting. Okay, that's the take coming in Biocon right now. Asian Paints is the other case in point. That's holding up very smartly today, up about 4% higher. And Harsh, we were talking about the commentary from the management, right? The fact that they still actually see a threat and competition heating up in the sector. They're still not negating the effects of competition within the space. And they're still talking about a very, very subdued kind of guidance, if I can call it that.
Yeah, I mean, the numbers and the guidance painted a slightly divergent picture in comparison, but the stock obviously is doing very well for itself, 4% higher. The sense, of course, is that competition has remained as is, and therefore, at least that is not the reason why we've seen growth. Nikhil, anything that stands out for you to justify the kind of move that we've seen on the stock for the last couple of days? 5% yesterday, nearly 4% again today, so a 10% move in all in 2 days.
So Harsh, on the call, what you said is right. The management did guide that the competitive intensity in the sector still remains very high. And this quarter, there was a benefit of early Diwali in that sense. So a lot of demand, which last year came in Q3, came into Q2 this year. And going forward, they have maintained that EBITDA margin will stay in that band of 18 to 20%. So all put together, you are still seeing an EPS of closer to 55 rupees for FY27. However, what has happened was that given the fact that competitive intensity was very high, a lot of hedge funds had this name as a funding short for them. And when a double-digit volume growth came this quarter, it took the street by surprise, and there was a lot of short covering that has happened in the name per se. I think closer to 3,000 levels, a lot of positives get built into the stock price. And the stock should then consolidate between this band of 2,700 to 3,000 rupees, I feel.
That's the take coming on Asian Paints. I'm just looking at SAMR numbers there, and there obviously seems like a one-off, which is why you have that sharp uptick in the bottom line. The revenue, of course, is absolutely flat. We'll analyze those numbers because you can see a little bit of a sharp reaction coming on the earnings as well. But of course, there's more than what meets the eye. We will dig out more details, but after this very short break. Trades and still in conversation with our two experts, Kunal Bothra as well as Nilesh Jain, still with us to talk about where they feel the market is headed next and what could be good opportunities in trade. We were just talking about leadership names, and that really continues today with the Hindalco holding up very strongly, good 2% higher. ICICI Bank is looking very good. L&T stays, and Bharti, which is now inching closer to that 2100 plus level. But still in conversation with Nikhil Ranka. Nikhil, just what's your own preference or bias within the entire banking pack? Because what started off with PSBs also of late faded away, and it seems that once again private banks are the ones which are finding favor in the market.
So, Aisha, our preference will still be in the banking space for large cap private sector banks. Clearly, if you see the valuations have become very, very palatable in that space. Most of the large cap banks, which earlier used to trade in excess of 2 times price to book, are now down anywhere from 1.3 to 1.8 times. One of the key concerns I feel the street has on the banking is whether we see a further rate cut in the December quarter. Because the impact of the 75 bips rate cut that we saw 3-4 months back flew through in the Q1 and Q2 quarters, where we saw on an average 15 to 20 bips NIM decline for most of the banks. If we have a further rate cut in the December quarter, then probably 10 to 15 bips of another NIM impact can come through. And that is what I think is keeping the stocks a bit subdued. But my sense is post that we should see NIM normalization, and these banks should bounce back.
Also, Samvardhana Motherson's numbers and the stock is flying in trade. In fact, doing very, very well for itself. 2.5% higher now, and from the lows of the day, much more than that. Huge spike on the stock, 3% higher. Strong beat on profitability. Motilal had estimated a 650 crore odd profit after tax number. I'll pull out the consensus as well, but for the moment, it's a very, very strong beat on that count. Kunal, views with regard to Samvardhana Motherson? Anything that you're spotting in terms of this 3% move, and what next?
This could be a potentially strong breakout move for Motherson, and apparently the stock had underperformed in the last, I think, month or so. I remember, I think 107, 108 was the resistance where the last time the stock reversed from, and on the downside 100, 102 was the support for Samvardhana Motherson. So I think it was trading into this 5-7% band potentially for the last 3 to 4 weeks. Breakout of this 107 mark now puts the stock into a potentially swing upside mode, where we may look at 114 to 115 as an immediate target.
The consensus in terms of profitability was 759 crore. It's come in at 827 crore, Aisha.
So that's quite a beat.
Yes, so it's a very strong beat with regard to those numbers. Of course, keen to understand how much of that is margin accrual. I'm going to just pull those numbers out. But yeah, stock has definitely moved 3%.
Okay, that's the take coming in right now on the stock, and you can see that spike up reacting to its earnings right now. But should in fact try and get in our researchers as well to try and analyze what exactly led to that kind of bump up and such a big beat coming in on PAT, while revenue on a year-on-year basis is largely flat. But what were the nitty-gritties of the quarter? That is something that remains to be seen, and what contributed to this kind of growth. But Nikhil, I don't know how closely you've been tracking SAMIL. Any take that you may have on the earnings or the entire sector per se?